It's not mine, no, that's on theirs. Okay, yeah. All right, we might kick off if everybody is seated. All right, okay everybody, we might kick off now, so I'm going to ask you to take your seats and... Oh, that got you. All right. Hi everybody, thank you so much for being here tonight. I'd like to start by acknowledging the traditional custodians of the land on which we meet tonight, the Gadigal people of the Eora Nation, and pay my respects to their elders past, present and emerging. Now we are live streaming tonight because there's a few watch parties going on. Stone and Chalk is hosting watch parties around Australia, and those that have participated in roundtables in Perth, in Adelaide, in Brisbane, Melbourne are able to be part of this because this is a truly national effort. It marks a year of consultation and co-design across Australia's startup investment ecosystem. Over that time, we've worked with investors, founders, governments, universities and ecosystem leaders to explore a fundamental challenge. Despite years of attention on the gender investment gap, we still lack the evidence to understand where opportunities are being missed and why. I'm incredibly proud to be launching the result of that work tonight. Show us the data from anecdote to evidence. At its core, this report asks a simple question. If we want to improve funding outcomes, do we actually understand how opportunities move through the funding system today? Okay. Okay, thank you. And actually, you can just flick again, Rochelle. Yep. So a quick note on what to expect tonight. We're going to share the key findings and recommendations of the report, and then we're going to hear from a panel of investors and ecosystem leaders about what better visibility could enable in practice and what comes next for the sector. A huge thank you to Stone and Chalk for co-hosting. You guys have been such a great support. I'd like to welcome the new CEO, Stella Solar, to say a few words.
Good evening, everyone. What an honour to welcome everyone here in the room and online, and we're really proud to host today's event. As Noga mentioned, I'm Stella Sola. I'm the CEO of Stone and Chalk. It's just my third month, but something that resonated from day one and still does is just the vibrancy of the community here. So here at Stone and Chalk, we operate Tech Central Innovation Hub, which as of reports from just yesterday is 296 scale-ups and startups right here at the center of Tech Central. So it's a real honor to bring the community together further, but something that I have directly experienced is that diversity is very much needed to be supported in the innovation community. I myself have had a fantastic career journey, and also here at Stone and Chalk, we run dedicated programs for female founders, and through this, we actually achieved a higher than industry average representation of female founders, currently tracking at 30%. But there is a lot more to do, which is why I think show me the data really matters, because we have much more to go here. And so again, welcome everyone. Thank you to Investment New South Wales for the collaboration to run this fantastic facility. And thank you to the great work of Equity Clear and also Minderoo to support such an important initiative. Welcome everyone.
So before we begin, I would just like to say a few thank yous. Obviously, acknowledge all of the organisations that have made tonight possible. Our founding partners, Scale Investors, Alberts and Giant Leap. Our report and launch partners, Investment New South Wales, Minderoo Foundation and the Government of Western Australia. Our knowledge partners, the UNSW Centre for Social Impact and Luna. And of course, our co-host for this evening, Stone and Chalk. And if you'll bear with me, I just want to acknowledge a few individuals who have contributed enormously behind the scenes. Of course, Samar Michaela, one of the original co-founders of Equity Clear, who has championed this work from the very beginning and whose belief in the importance of this issue has helped bring us to this point. Genevieve Abbey, who co-authored the report with me, challenged my thinking and strengthened the work immeasurably. And Ananya Dave, who, as our project coordinator, contributed countless hours to the initiative and helped keep an extraordinarily complex initiative moving. And of course, thank you to the many investors, founders, ecosystem leaders, government representatives and researchers who generously shared their time, expertise and feedback throughout the consultation process. This report is a genuine collective effort and we're grateful to all of you. Now, before we get into the findings and recommendations, I just wanted to take a moment to reflect on the journey that brought us here. And I know many of you here tonight participated in at least one of those sessions, so thank you so much. Now, we are very grateful tonight that we have the Honourable Chantavong with us tonight, Analok Chantavong, MP Minister for Innovation, Science and Technology, to officially open tonight's event. Thank you so much for being here. Investment New South Wales has been such a strong supporter of this work from the outset, helping us bring together stakeholders from across the sector and recognising the importance of moving from anecdote to evidence. I'd like to invite you to say a few words.
Thank you very much, Noga, and good evening, ladies and gentlemen. What a delight it is to be here to launch this very important report. I do want to thank Noga and Samar and the team at Equity for doing this very important research project, because if we are to be a great country, a great state for the tech innovation system, then those stats can't be permanent and they can't last any much longer than they already have. Because it's not about equity, it is about equity, but it's also about economics. It's about making sure the best ideas see the finances, see the ideas turn into jobs, into businesses, because we're missing out on so much by not actually funding female founder startups. It can't be that 50% of the population only gets 2% of an all-gender team, or they only get 8% of the deals. And I know that in New South Wales, our percentage is only 7%. We can't say, well, just we're 3 times the national average. Well, that's not good enough either. So I really do think the evidence that we have here should be used as a hammer to break down the funding wall so that more female startups get a look in, get funded, and get the opportunity to grow, to create the prosperity for all Australians and for all of us as well. Now, look, technology is an exciting space to be in. It is the future of the New South Wales economy, indeed the Australian economy. The digitisation of economies all over the world with AI, data centres and algorithms. It's where it's going to be for the jobs of the future, how we grow, and of course how we compete on an international scale. So look, this report is groundbreaking. I want to thank the 160 organisations that have been part of this. It's a national conversation, and this should only not happen in New South Wales, where we break down these barriers, but it should happen all across the country. So Noga, your team has done great work, and we look forward to seeing the changes, and the changes, they must come, and they can't come soon enough. You know, as Cuba Gooding says in the movie, show us the money. I don't know if they show us the data now, no, show us the money to ensure that we get funded, women get funded, because there are great ideas out there, and it's not good enough, I think, for a society like ours, for Australians, that we don't fund great ideas from women. It's not mathematically fair or realistic that 50% only get 2% of the funding. And the fact that the stats also show that those female venture startups are actually more successful and actually get more revenue. So from every angle, this report shows that something's not right in the system. But it's also an obligation on government, on industry, and also the venture capital industry as well, to take a good hard look at the way things have been done and to accept that it's not right and it's not fair, and that change comes from every individual knowing that they have a responsibility and an obligation to fund great ideas from women so that we can all prosper and we can all grow together. So let's continue the message. We've shown you the data, now show us the money. Thank you very much, Noga.
All right, so let's get into it. Thank you, Minister, so much for your support of this work. It really means a lot. So the report we're launching tonight begins with a simple but uncomfortable question. More than $5 billion was invested into Australian startups last year. Just 2% went to women-only founders, 22% to mixed-gender teams, and the vast majority still goes to all-male teams. The question is why, despite years of attention, effort and investment across the ecosystem, has the outcome barely changed? Australia's startup ecosystem prides itself on being data-driven, and yet one of the most persistent patterns in venture capital remains surprisingly difficult to explain. This isn't a niche issue, it's one of the biggest untapped economic opportunities in our country. Productivity has been flat for more than a decade, growing at just 1.1% a year for the slowest pace since World War II. Both the Productivity Commission and the Treasury have said it plainly. Innovation, entrepreneurship and smarter allocation of capital are critical to turning that around. Yet our innovation system is underperforming because half the talent pool is underutilised. Diversity isn't a social nice to have, it's an economic multiplier. When we started this process, we had a hypothesis. We suspected that one of the reasons progress had been so difficult was that we lacked visibility into how opportunities move through the funding pipeline. We can see who ultimately gets funding, but we can't see what happens before that point. Who applied? Who received a meeting? Who progressed through to due diligence? What reached investment committee? And where are opportunities falling away? In other words, we could observe the outcome, but we couldn't observe the pathway that produced it. And if that's true, it becomes incredibly difficult to know where barriers emerge, which interventions are working, or where effort should be focused. So one of the key questions we put to the ecosystem was whether that hypothesis resonated, and if it did, what would be required to address it. We stepped back and looked at the broader data landscape, and something became obvious. Australia already has good visibility into many parts of the venture ecosystem. We have data on startups. We have data on funding outcomes. We have data on fund performance. But sitting between those layers is a critical piece of information that we rarely measure consistently, the investment decision pipeline. That's the place where opportunities are sourced, progressed, assessed, and ultimately selected. And that is the industry's blind spot. And it's important because this is where many of the decisions that shape funding outcomes actually occur. Without visibility into that layer, we're often trying to explain outcomes without understanding how opportunities moved through the system in the first place. So you could say, and given we're in a sporting frame of mind with the Socceroos, we're looking at the scoreboard without being able to see the game. So, having identified what we believed was a missing layer of market infrastructure, we wanted to test that thinking with the people who would ultimately need to use it. What followed was a national conversation involving investors, founders, governments, universities and ecosystem leaders across Australia. Over 6 months, we engaged more than 160 organisations across 5 states to understand whether the challenge resonated, what barriers exist, and what a practical solution would need to look like. Part of that was about design, but just as importantly, it was about engagement, because building a shared understanding of the challenge, surfacing concerns early, and ensuring the ecosystem had a genuine opportunity to help shape the solution was really crucial, because ultimately, voluntary standards don't succeed simply because they're well designed. They succeed because people choose to adopt them. So I know many of you in the room here attended a roundtable, and you'll know that these were very robust discussions. Each session involved multiple breakout groups, structured discussion, facilitated workshops, follow-up engagement, post-it notes, transcripts, Slido input, surveys from many, many people across the country. But when we stepped back and looked across all of that material, actually some clear patterns began to emerge. Many of the same themes appeared regardless of geography, stakeholder group or organisation type. And so what you'll see in the report is informed by both the qualitative consultation and the quantitative data we gathered throughout the process. And of course there were different perspectives, but the level of alignment around the core challenges and the opportunities was striking. So 3 things became clear. First, we're not starting from zero. One of the most surprising findings was that 84% of organisations told us they're already collecting diversity data in some form. And actually, among VC firms, that figure rises even further. 92% are already collecting gender data. So that's important because it fundamentally changes the nature of the challenge. This isn't about convincing people to start collecting data. They're already doing it. But here's the thing, and that leads us to the second learning, which is they're all doing it totally differently. Different definitions, different collection points, different systems, different reporting approaches, which means we have lots of individual data sets, but very little ability to compare, benchmark, or generate market level insight. And third, the barriers are largely practical. The questions we heard weren't about whether visibility matters. There were questions about privacy, implementation, resourcing, and reporting burden. We also looked closely at what is happening internationally. So one of the things that became clear is that Australia is not grappling with a unique challenge. Around the world, investors, governments, and ecosystem organisations are asking many of the same questions. How do we improve visibility? How do we generate more meaningful evidence? And how do we do it in a way that's practical for participants? The models differ from market to market, but the direction of travel is remarkably similar. Shared definitions, consistent reporting, and market-level benchmarking. Different markets, similar conclusion. Consistency matters. And that brings us to the report's central recommendation. Australia should establish a national reporting standard for investment pipeline diversity. Consistent definitions, collection methods, and reporting practices are the foundation for generating meaningful market-level insight. They enable us to better understand how opportunities move through the funding system, where patterns emerge, and where interventions may be most effective. And importantly, they provide the infrastructure needed to move from anecdote to evidence. So throughout the consultation process, one thing became very clear. Reporting on pipeline diversity data is much more than a spreadsheet. It requires three components working together. So the first is a code. Aligned with the UK model, this is a voluntary commitment that creates a common starting point and signals participation for the investors that are signed up to it. The second is a common data method. This is the technical backbone of the standard. Shared definitions, shared collection points, and a common approach to how data is recorded. And the third is a reporting framework, because ultimately the value comes from turning individual data sets into meaningful market level insight. So together, these are the three elements that create the foundation for our national reporting standard that'll lead to consistent, comparable reporting across the ecosystem. So one of our biggest design choices here was actually restraint. The temptation with initiatives like this is to keep adding more fields, more reporting requirements, more complexity. But throughout this process, we kept coming back to a simple principle. Adoption matters more than complexity. So this has been designed to work in practice, not just in theory. It's voluntary, it fits within existing workflows, it starts with a deliberately small data set, and it's designed to scale over time. And if I haven't said it yet, it's completely anonymised and aggregated reporting. So this is not about naming and shaming. We are starting with gender because that's 50% of the population, but the architecture has been designed to evolve, creating the potential to expand into other elements of diversity in the future. So trust came up repeatedly through this process. Organisations are willing to share insights, but understandably, they also wanted confidence in how the data would be managed, protected and used. And that's why trust has been built into the design from the beginning. Data will be aggregated and anonymised. Reporting will focus on market level insight rather than individual organisational performance. Participation is voluntary. And importantly, we're partnering with the UNSW Centre for Social Impact and Minderoo Foundation to bring independent research expertise, institutional credibility, and trusted stewardship to the work. So the goal here isn't just to produce a report that's going to sit in a drawer. This is about building infrastructure that's going to help the ecosystem learn over time. Shared visibility creates better evidence, which supports more informed decisions. And that creates the opportunity for more effective action. Ultimately, that gives us a better chance of ensuring capital is flowing to the best opportunities wherever they come from. Because this isn't just a diversity issue, it's an economic one. Every time the system overlooks potential, Australia misses out on innovation, productivity, economic value and talent. Better capital allocation starts with better information. That's why the real value of this work doesn't come from what happens tonight, it happens from consistent use over time. So tonight marks an important transition from design into implementation. The next step is the founding pilot cohort. This pilot will allow us to test the standard in practice, refine it based on real world experience, and continue engagement across the ecosystem. And I do want to mention that this will include deeper engagement with founders because, of course, their perspectives remain critical to understanding how opportunities move through the funding process. So the report sets out the roadmap, but implementation is where we discover actually what works, what needs adjustment, and what is required for broader adoption. Because ultimately tonight isn't the end of a process, although it feels like it with the delivery of a report, it's actually just the beginning. It's the point at which the work starts to become real. I'm thrilled to announce that we have already exceeded our initial target for the founding pilot cohort before the report was even publicly launched. The organisations on this slide represent a growing cross-section of Australia's investment ecosystem. The cohort includes investors, accelerators, and alternative capital providers. From day one, this has been about much more than venture capital. The common data method enables us to track pipeline data across any type of funding pathway. And that's important because if we want to understand how opportunities move through the system, we need visibility not just into venture funding, but into the broader pathways that founders navigate to access capital. This pilot gives us the opportunity to begin building that picture. Now, you will have seen that there is a little QR code around the place, and if your organisation is interested in learning more, just have a scan and you can let us know and we'll have a chat with you. So why should your organisation choose to participate? Investors work incredibly hard to identify and back exceptional opportunities. But what if your organisation is systematically overlooking an entire opportunity set? Most investors have limited visibility into how opportunities move through their pipeline relative to the broader market. So participation creates visibility into how your pipeline patterns compare with industry benchmarks. That doesn't tell us which companies should or shouldn't get funded, but it does help you to better understand whether you're accessing the full opportunity set, where patterns may be emerging, and whether further investigation may be warranted. And as we've said, better capital allocation starts with better information. So it's a pretty straightforward process to participate in the pilot. You essentially map your existing CRM or reporting process to the common data model, to the key metrics, and then you report in an agreed cadence using data you've already collected wherever possible. That data will be aggregated and anonymised with insights reported at a market level rather than an organisation level. And in return, participants will get confidential benchmarking and access to insights that actually just don't exist today. So participation doesn't require you to join a working group or attend additional meetings, although there will be opportunities for those who wish to contribute feedback and help inform emerging best practice. And you know, one of the most important lessons from this work is that adoption doesn't happen in a single place. It happens through multiple participants across the ecosystem. For investors, it's relatively straightforward. It becomes part of how you track and understand your pipeline in a consistent way. For LPs, the role is different. This becomes one of the questions you start asking of fund managers. Are you a signatory to the Investing in Women Code? Are you participating in the Equity Clear Standard? Because expectations from capital providers are one of the things that help drive adoption. And for the broader ecosystem, there is also a role to play. Many of the signals that shape funding outcomes emerge long before a company reaches an investment committee, which means consistency across the wider ecosystem matters too. Ultimately, this is how standards become established. Participation creates expectations, expectations drive adoption, and when adoption becomes widespread, something stops being an initiative and starts becoming infrastructure, and just that's the way we do things. So one of the key themes that emerged consistently throughout the consultation process was that people wanted confidence that this was going to make a difference, that if they did this reporting and did the work, it wasn't going to be a report that sat in a drawer. Better visibility will lead to better decisions. So we'd like to explore that in our panel this evening. We're going to be welcoming to the stage, we have Kate Glazebrook, Liza Noonan, Lucy Steed and Grant McCarthy to talk about from anecdote to evidence, what could better data enable? Thanks. Yep, that's great. All right, I'm just going to start by asking you guys to quickly introduce yourself.
First of all, hi, Kate Glazebrook. I head up Impact at Blackbird Ventures. I did want to just start off by saying a huge thank you to you, Noga. I think many of us have been in rooms with various forms of this kind of group over the last couple of years. I wanted to call out Samar, who's in this room, one of the 3 original co-founders of Equity Clear, together with Lisa and Rachel. And we wouldn't be here having a conversation about doing real infrastructure in this space were it not for the genuine effort off the side of your day jobs of these humans. And I just wanted to say and congratulate you on getting us to this place. So I'm really pleased to be here. I head up Impact at Blackbird.
Well said. Lovely to meet you all. I'm Lucy Steed, and I co-founded a group called Melior Investment Management about 7 years ago, and that's an Australian equities impact manager focused on delivering positive social environmental impact as well as competitive returns. So I'm providing a bit of a public markets perspective tonight.
Oh, I've got one, thank you. Hi, I'm Liza Noonan. I'm the CEO of Cicada Innovations. We're a deep tech incubator supporting founders building big businesses based on breakthrough science and innovative engineering. We've been around for about 25 years and over that time have supported over 400 Australian deep tech companies grow and raise up to, it's over $6.5 billion in capital. I just want to probably take this moment to echo Kate's thoughts and gratitude to Noga. I remember meeting you, Noga. Our paths crossed during our shared history with Springboard, but I remember meeting you at my time at Investment New South Wales and just your advocacy for the fact that this is the problem and this is what we need to address. Amazing.
I've been on the hill a long time.
Full circle moment, so congratulations.
Hi everybody, Grant McCarthy. I'm managing partner at Tidal Ventures. We're an early stage seed and growth fund, mainly focused on the Australian and US market for early stage technology businesses. I've known her for a long time, and she's a force of nature, so this is not a surprise.
You didn't invest in my first company, though.
No, I didn't. I think the exact words were, "You ghosted me." Right?
You did.
So congratulations and thank you for having me tonight.
Thanks, guys. Thanks for being here. So, look, I'm going to start with Kate because Blackbird has actually been participating in diversity pipeline reporting for some time and has been doing so publicly, often gets talked about in the media for doing so. But what I'd like to explore, Kate, is like, what have you guys learned from doing that process and how has it shaped how you think about your own pipeline and sourcing?
Yeah, so we first started publishing pretty candidly the kind of investment pipeline that you talked through just before actually Equity Clear kind of came into its essence. So we're really pleased to see that that very quickly became a thing that wasn't just a single fund, but was actually being run across the industry. I mean, you pointed it out. This is an industry that lives and dies by data. And so it seemed strange that we just didn't have much visibility on this like seemingly intractable problem. So we did the work of trying to, get our data in order to be able to answer the question, well, what's happening in the part of the process that we see? We may not control absolutely every element of that, but we were a bit tired of this kind of binary debate of like, it's the investor's fault or it's the pipeline fault. And it feels like there's no hard problem that's easily answered by a yes, no to a binary question like that. And so we spent some time doing the work behind the scenes. And from there, it's led to such an interesting set of conversations for us. Some of those, as some of you may know, have played out publicly. But, we've committed every year to being able to say, this is what it looks like to us and get better and better at being able to understand how our pipeline looks compared to what best industry benchmark we can find at that time. And this is where this is going to become crucial, is we don't actually have true benchmark for like, what does the MET stage look like? What does the IC, stage look like? But we do know beginning and end of that, as you pointed out, Noga. And so maybe just to make it a bit practical for folks, one of the things that I was really passionate about at Blackbird, together with my colleagues, is being able to use the data to interrogate hypotheses. So, as many of us know, there are a lot of people worldwide who do a lot of research on this topic because it turns out it's not an Australian-only problem, and it's not even unique to venture. And so there are a lot of people who've tried to study, well, what are the drivers of these things? And some of those hypotheses look like, well, it all happens at the pitch stage, or it all happens at the investment committee stage, or it all happens because of the gender of the investor bringing the deal in. And all of these things have merit, and in various circumstances, they are true for some funds. But getting the data allowed us to interrogate whether those theories or some pieces of research held true for us at Blackbird. So one of the things that we've learned over the years is actually the investment committee stage, if a female co-founder team gets through to the investment committee stage, that team is more likely than an all-male team to get a yes. And that was surprising to many people because it's often the place where people think the greatest bias might sit. So that allowed us to look at, well, what are the component parts of our investment committee process that may drive a difference there? And so that allowed us to sort of look at, well, actually, we do a blind scoring process. We have done that for many years, long before we were doing pipeline analysis, whereby whoever's in the pitch of any level of seniority rates the pitch and writes their evaluation, submits it without seeing anybody else's. And then that forms the basis of the conversation around the table. And now, none of these things are perfect, but those people who are interested in bias, like you worry about groupthink, you worry about seniority bias, you worry about the managing partner speaking first and junior associates holding back on what they say. So we think that may be playing a part in why that stage, for us at least, doesn't seem to be the principal issue. It also allowed us to look at things like gender of investor and whether that had an impact. And the last time we did that analysis, it didn't seem to, within our case, have the impact. Now, that still leaves us with loads of other questions to try to answer. And we spend a lot of time trying to do that, as well as run initiatives to try and boost the parts of the process that aren't working as well for us. But to me, this discussion goes from one of fear, frankly, and like, I don't know what the problem is, or like kind of a frustration, the knowledge that you are accountable and you ought to be accountable for these outcomes, but no knowledge of where you actually want to target your efforts, to being able to get much more granular. And it will be different fund by fund. And that's why I'm excited to see this pilot roll out, because it's probably not going to be the case that every fund's issue is the same. But this will allow them to do a better job of identifying which one.
Thanks, Kate. Liza, I might go to you. You've obviously worked in government and now in the pipeline stage, I suppose you would say, of the ecosystem. Interested in your time in government, like how does, when you're trying to improve funding outcomes for diverse founders, how do you do that when you don't actually understand sort of where in the sourcing pipeline that they're falling out from? Like, how did you kind of think about tackling that?
Well, I guess, the risk is you're solving for the wrong problem. And so you get headline statistics of in 2025, only 2% of venture went to women-only teams. Okay, well, maybe we need to do more pitch coaching and we need to do more female-focused accelerators. There's a problem in that we're working with incomplete data. And so therefore the policy interventions aren't as precise and targeted as they should be. And as we all know, those here in the room tonight, this is not a new problem. This is a problem that's persisted. And I think we're still here going, well, the interventions haven't worked. And I genuinely think the interventions haven't worked because we haven't had the right data.
Yeah. I mean, as you're saying, you're kind of playing the game without seeing the scoreboard. You don't know what's happening. Yeah. Grant, interested from your perspective, like mainstream VC or investor, what's the case for this from your perspective? Like, why should someone who's focused purely on getting the best companies and getting a good return care about how opportunities are moving through the broader ecosystem?
That one's broken. So I think two things. One is, for a fund like ours that we're pretty specialised in what we do and what we look for from an investment perspective in our thesis around all things AI, etc. I think what we've learned over the years, and we've followed the data in this, we're probably not as accurate at it sometimes as we'd like to be. But in the sense of like trying to understand at the end of the day where opportunities lie, for us as a fund and our investors, because ultimately we are the custodian of our LPs' money and have to make their money, otherwise I don't have a job, is kind of twofold. So one is we don't think about it in the sense of male, female, whatever it might be from a diversity perspective, but what we do see a lot is a lack of available participation is almost what we call it, right? So when we looked at our data, and this is more back of the envelope, it won't be as accurate as Blackbird's per se, but let's say in the last, 4 weeks, we've had 60 deals through the pipeline, right? Of that, 70% of that 60 deals is all male. About 25% of it was male-female, and the other 5% was female only, which is interesting in the sense that 5% lines up with sort of the 2% in some ways, right? And what's interesting when you do talk to, because we always follow this in the sense of like, so how did you hear about Tidal, and why did you call us, or how did you find us, and why did you put a email through the website, whatever. It's a case where I think we find a lot of the time is that there's just a real lack of knowledge about how to go after capital in the first place. Like, you can get on a website and find it, but the fact of the matter is in venture capital, and this has been so for the last 60 years in the US and also the last 12 or so years in Australia, or 13 years or whatever, is that the majority of deals still get done through referrals, right? And networks matter, right? And who you know matters, and endorsement matters. And because you have a lower level of participation, statistically, and their opportunity to find those networks, and I won't call them old boy networks per se, but there is a lot of that, obviously, just their accessibility to be endorsed by someone that the VC then will take proper time to engage with, even up front at the top of the funnel, right? Because venture capital is, believe it or not, a sales game. Like, you literally create these funnels and you have people flow through them and you try and figure out what to invest in or not. It's just, I won't say you're set up to fail to begin with, but the market and what we need to do to understand from data on where to place resources and capital about solving this problem, that's what we need to figure out, to be quite honest. Because it takes investment and it takes purpose of people to go, actually, the way we need to hunt and find great people and great opportunities is a bit different to how we've done it in the past. Or we need to invest in ways that people go, actually, that is the tried and true way that it's done, but educate people on how you go about it.
And I think it's going to be so interesting, this benchmarking, because you'll be able to see, like, is it actually 5% across the ecosystem, or are different funds seeing different outcomes, different participation rates?
And we know that's a bit different by funds that focus on industry segments. Obviously, like Cicada would be interesting, but, obviously female participation in STEM, for example, has always been lacking. And it's been a huge driver of government and policy and money, etc. And I know some of those participation rates have picked up, but if you're a deep tech focused fund or a relatively software focused fund like us, like, naturally the level of participation and the volume of people that are pitching you from that side of the market, per se, female side of the market, is just less, right? And so that's actually a bigger problem to solve, we think, sometimes, because on the flip side, like, when we look at our data, when female only gets to IC, or combined female founders get to IC, they're actually 35% successful on a yes. Okay. Female male are actually 55%, and males the rest, kind of thing. So.
Thanks, Grant. Lucy, so you obviously come from a public market perspective. So you've spent a lot of your career working within transparency frameworks and actually applying these kinds of reporting obligations in practice, and looking at how companies do this. I'd love to kind of explore what lessons we can learn from those other reporting frameworks where transparency has helped shape behaviour and decision making.
Grab this one, working. I think it's been really interesting in the last few years how much corporate Australia has really been adopting more and more frameworks, and, they're mandatory frameworks. And you're probably all quite aware of the mandatory climate reporting frameworks which have come out in Australia and obviously overseas. What I think is interesting is that not as many people are familiar with the gender frameworks that have been coming out in the last couple of years, and that we are globally leading in this area. And I think that, that provides some really interesting insights for us. I think, first of all, on the climate side, we probably didn't quite have the right lens originally. I think it became a bit of a marketing exercise. People started doing net zero targets, and then suddenly there was greenwashing issues, and, it wasn't actually being managed, those targets, by the right group. And now with mandatory climate reporting, that needs to be signed off by boards. So it's really connected to the business case, which is super super important. You know, what are my transition risks? What are my physical risks? What are the opportunities with climate? And I think that's the lens when we're looking at data that we really need to apply. And it shouldn't be a marketing exercise. Some people have been talking about pink washing, you know, female founders, and you know, my response to that is that, you know, you got to be careful with that, because we've seen with greenwashing, then we had to have green rinsing to kind of step back and take back the, you know, the big statements that were made, and again with pink washing, we'd have to do some pink rinsing in our hair to step back from that. So, you know, avoid the marketing piece of this and really make sure that it's connected to the business and the strategy of the organisation. On the gender side, you know, it's been really interesting over the last 3 years. You know, we've had the rollout of the gender pay gap data that went public, and we saw a huge response and reaction to that. You know, there were reputation issues, there were people losing contracts because they hadn't really been, they'd been collecting the data privately for some time, but they hadn't really cared about the data. It's really important, again, you know, that where we're at now is the CEO is signing off on that information, and, you know, that's really important, that it's not an HR and compliance issue. It's actually, you know, a key business discussion, because ultimately, you know, our most important asset is our people. So, you know, when we look at gender, we need to look at it in that, with that lens, which I think is really important. And, you know, it's groundbreaking what's happening this year. You know, we're the first country globally that's setting gender targets. So every company with over 500 employees is having to choose 3 gender targets out of a group of 19 that were GIA sets, and they will be assessed on those over the next 3 years. And those who don't comply will have the risk of being named in Parliament. They will have the risk of having their WGEA certificate of compliance withdrawn, which means they cannot tender for government contracts. So, you know, this data is important. It's actually related to your opportunity to win business, and, you know, diversity matters.
Lucy, I'll stay with you actually for a second, because I think one of the things we've learned from this report is that many organisations are collecting data themselves internally. Question to you, like, why isn't it enough just to look at your own data? What's the difference between understanding your own data and understanding how you compare to the broader market?
Yeah, I mean, I think, you know, we would all agree you can't live in a bubble. You know, we need to look around and we need to learn from others, and we need to have a growth mindset and not be defensive. And, you know, the work we do at Melior, we build, you know, a 100-factor ESG model. We look at every single company in the ASX 300's both social and environmental metrics, and we're really looking for, you know, not only just absolute, but also relatively how you can competing against your competitors, and that's no different to any area. You know, I think we need to be really mindful of that, and we need to be able to respond to that, and we need to double check ourselves that what we think, well, we're good at this. Well, are you good at that? You know, you may be not good at that. You need to see the other data to assess that. And that's what we're always impressed by listed companies we engage with, when they're actually really aware of the industry, they're aware of their competitors, and they're thinking in that, you know, how do we improve? And to us, that's, you know, performance upside.
Thanks. Liza, I might go to you. So one of the reasons that Equity Clear is working, you know, beyond VC, but also with accelerators and ecosystem orgs, is really trying to understand the pathway before funding and how that feeds into it. I'd love to get your perspective on why that's important and what we're missing if we only measure VC activity.
Absolutely. So I think if we miss the sort of top of the funnel of where founders come in, or when women come into this ecosystem, we miss potential pipeline distortions. So I think in the report you talk about warm inbounds, and you just mentioned it yourself, Trevor, like the importance of those warm introductions and the success rate. Accelerators and incubators play a really important role in that. So if we're not getting women into those programs, it's the first failing is there. I also think at that early stage, we see where some of the undercapitalisation risks start to emerge. And it might not be getting VC funding, it could be sources of non-dilutive funding. Yeah. So, you know, some of the work actually it did in government, and I think this is actually a good example of how government is trying to change based on the data they have access to, is looking at applications for things like in New South Wales, the MVP grant. So they had data. They could see that actually it wasn't a pipeline problem. They were getting and this data's a couple of years old, so I just want to put that caveat out there. But it was the conversion rates, particularly at the eligibility to full assessment rate, and it was the match funding. So we know that was a weakness in the design of that particular program that disincentivized or disadvantaged, women. So there was address to that in the new MVP design. So I think it's looking at some of those like non-VC funding sources that we know is super important at those early stages to get women capitalised and competitive as they grow their businesses.
Yeah, that's such a good point. I mean, government is one of the major distributors of innovation funding in this country, and we included them in our consultations, and there is certainly an openness and a willingness to participate in this kind of reporting. I suspect they may not be pilot participants. We might need to iron out some of the kinks first, but yeah, I think that's where we'll start to see some really interesting outcomes as well when we can deploy innovation funding in this country in a more equitable way.
And like VC funds, the knowledge, the benchmarking of, well, is it a pipeline problem? So if we go out to market for applications for an accelerator and we only get 5% of applicants who are women teams, but with this sort of data framework in mind, we see other incubators in the deep tech space who are doing better, well, then we know it's our problem and that we need to look at the design and just, go beyond the anecdotes.
Yep, absolutely. Grant, so love to kind of hear from you. Now, the point of this panel is anecdote to evidence, what would better data enable? Can you think of a time in your organisation perhaps where everyone thought they understood the problem, but once you looked more closely,
Never.
The real issue turned out to be somewhere else? You always know the answer. Fabulous.
We never completely understand the problem. Sorry, what was the question again?
A time when you thought you knew the answer, but when you started to look at the evidence, it was actually something totally different.
And that's every day. No, in all seriousness, I think, look, the great thing being in the industry we're in, and particularly this current innovation cycle, right, is that, intellectual curiosity abounds and you can, expand your mind to just about anything these days in terms of what opportunities might look like and who might be great at it. And I think, like, maybe one thing I'd say on that, venture capital, actually Nikki used to say this a lot, right? Which was, venture capital is a inbound business, not an outbound business. Inbound being, you build a brand and reputation, founders come and find you for what you're great at. Whereas an outbound business is like private equity. I pick up the yellow pages and I go, I'm going to roll up the doctors this week, kind of thing. But I think that's changed somewhat. And so one of the things that we have spent a bunch more time on, and just knowing our deal flow into those pipes and that now, is we go hunt a lot more. Hunt for talent, hunt for capabilities, hunt for exceptional, curious thinkers in universities and industries. And I think that is something that both as an industry and probably us particularly have spent a bunch more time on, how would you call it, debating amongst ourselves around what we thought was always a model that was go and build a brand, go and build a reputation, whether that's female founders, male founders, great technologists, whatever it might be, and kind of flipping that a lot more these days. And I think that's something that is interesting in this context with this data, where it's not just about sort of setting up opportunities, it's for the funds themselves to turn their mind to actually go and, terrible word, but hunt. Rather than just sit back and wait for that great founder to come in the front door.
Doing things differently. That's part
100%.
of it, right? Like, we have to think differently if we're going to solve this challenge. I mean, I think that leads well into you, Kate, because you've spent a lot of time thinking about systemic challenges. I know you were one of the people I spoke to a lot about this concept of building a common data standard. Like, I'd love to ask you, imagine we're back here in 3 years, this initiative has worked exactly as it was intended. What do you think, what's the first chart you want to look at, or what's one decision you're making differently because the evidence now exists?
I hope no one will hold it against me that I'm the sort of person who enjoys lots of conversations about common data standards. In 3 years, wouldn't it be wonderful if we didn't look at the same stats? I mean, they're not going to change quickly. Like, that's the hard part, I think. And I think we all kind of know that. Like, even with this work, it's going to be a process of understanding and like delving deep into what can we take from this. And then the funds that really care, they're going to invest in the thing that might help move the needle for them and hopefully have better data to know, did that initiative work or not? Like, we're deep in that process still, many years in. And things are getting better, but it's not a straightforward line. It's not linear, and it's not as fast as we would like it to be. But I would hope that in 3 years, we're coming back and we're having a conversation, one, where the actual outcome data has changed. If that outcome data hasn't changed in 3 years, then yeah, we've done a good job at understanding ourselves, but we're not much further advanced on the real thing that matters, which is actually deploying more capital into the most talented founders, regardless of their background. And I think we all know we're leaving money on the table there. So the outcome data, I think, is probably the one we'll start with. But then I think the thing that would be really fantastic as an industry is that we actually have the ability to say, like, clustering funds or organizations by, here's the thing that I uncovered was the problem for me. Let's crowdsource a little bit. And that is already happening. Many of the people in this room are people that we all speak to gather ideas and try new things with. We collaborate on lots of different things, but we'll be in a much better position to be able to say, hey, I had some success over here. And I think this is not a zero-sum game. And that's kind of key to making that collaboration work, is like, there is a lot of opportunity out there, and none of us are going to do more than X number of deals in a given year. And so there should be a lot of opportunity for that collaboration. So to more succinctly answer, I think it's outcome data. And then I think in a couple of years, it's much more clarity on, like, I'm zero focused on this thing and I've got some great outcomes that I can share with others.
Thanks, Kate. We have a little bit of time for questions before we wrap up. So I'm going to go to the audience if anyone has a burning question. Or maybe we've answered all your questions. Yes. That's a small question, Kat. Do you have any thoughts on that, Kate?
I'm picking up a couple of things, so correct me if I've got this wrong here. I think there was one part of it which is actually like certainly beyond demography. What are the sort of character traits or perspectives of given founders that we think track with success? First of all, am I broadly right that that was one of the things? I think it's quite an interesting question, and every fund thinks about that quite differently. I think everyone has the same, like, probably top, you know, in the top 5 traits or something, we all share probably a couple of the same, you know, adaptability, curiosity, intellectual rigor, and probably resilience. But every fund will skew differently in terms of how they think about that. One thing that could be very interesting, though it's not going to be easy to do, is to get to that layer of, well, if we can map the ecosystem of early pipeline actors, yourselves and Cicada and many others, and get a better understanding of, like, well, we're geared around fostering this particular part of the founder landscape. First of all, we might then know, well, nobody's really tackling this part of the founder landscape, and should somebody step into that space? But once we have that understanding, well, what's the best mapping? Like, because at the moment, there's a lot of founders that pop out of the end of an accelerator, and it is to some extent a numbers game. And they're kind of like, well, who's actually my best partner here? Who's my best capital partner? Who's really, really looking for a founder with my, you know, profile, with the kind of business that I'm interested in? And maybe we'll get, I mean, it's possible that off the back of this, we'll get a richer understanding of, like, how to spend your time as a founder, which we all know time is the most precious asset that they have, how to spend their time as they move through that kind of, as you say, valley of death from a program to a potential capital partner. I don't know if that fully answers your question, but that could be an interesting outcome.
Sorry, over there I saw first. Natasha, hi. Yeah. Yeah. Look, and I mean, I have a huge wish list of how we roll this out as well. And I think, yeah, for understanding the valley of death, where women actually start to fall out, not just in the pipeline and bidding stages, those are things we can think about layering on over time. And I hear Kate saying in 3 years we need change, which is, I agree. But it all just does take time. And so we have to get the process, we are a startup as well. We have to get the process right. We start with an MVP and we figure it out. But then we can scale pretty quickly. Once, it fits in everybody's processes, we understand how to get the data, do it securely. I think when we already look at where the UK has come from year 1 to year 5, there's an incredible additional richness of data every single year that we're seeing. And within that period of time, they're delivering change. So, yeah. So, I mean, it's interesting because just the mere fact of reporting consistently on your pipeline and being a signatory to the Investing in Women Code delivers a better than market investment in women. And so, as you'll have seen, when you focus on your own pipeline, you can start to understand how you're performing and where to make improvements. They're starting to have learnings around where women need to be on the investment process. They need to be investment decision makers. We know this. So having pathways for them to become angel investors, having pathways for them to become fund managers, so that they can actually be on an IC and make investment decisions. All of those things are starting to come through. Yeah, so yes, I agree. Lots of interesting things to learn. Will it get funded? I hope so. Like this all does need to be funded still over time. Yes, so on to you. Thanks.
I have heard a lot about the barrier. One of the biggest barriers to collecting the free deal data, which is the ability to ask for the information. And there are levels of discomfort around it. There are trust issues. There are a lot of parts of that. Is there any evidence that you've gained from the forums themselves as to what it would take to overcome that barrier, or have we had any learnings from other stuff?
It's a really challenging one because when we want to start at the lowest, like maximise adoption, lowest barrier to entry, we need to start with the things that funds are already collecting and doing. And so that will require some compromise in the data set, which is allowing investors to make decisions about the gender based on the information they have. However, that is not best practice. And Equity Clear is putting in place best practice guidelines around how to collect data. But that means a change in process for investors. And we need to get them comfortable in that, how they do the intake of the founder data. And so that's why we're starting to hold founder consultations and to really get clear on how that would look. So Diversity Data Alliance, we're quite speaking with them. They're in the US and the UK on how they do that. But that is a complex thing. What we have heard from DDA is that actually, like, don't let perfection be the enemy of progress, and it's better to get the data, even if it's not 100% accurate, but put in place those best practice guidelines as to how to do it. I mean, I know, Kate, we've spoken about this a little bit. Do you have any thoughts? Like, you know, Blackbird obviously at the moment doesn't have an intake requirement, doesn't have a survey for founders to complete when they make an application. You guys have thought about what that would look like and that process change?
Yeah, so actually, if you apply through the website, you do go through a form, but as we all know, that's not the only pathway into, you know, introductions and a whole bunch of other things. So we know we have, you know, it's not perfect in that respect. My experience on this kind of goes back to my pre-Blackbird days running Applied, which is a debiased hiring platform, which did collect, you know, as part of an application process for over 1 million candidates that came through it, 8 different dimensions of diversity. And so we spent a long time actually working with government departments on best practice on how to ask those questions, like literally what are the fields that you would use that is considered to be the most inclusive way of asking these questions. And of course, all of the privacy considerations around that, the data standards, but also the right of an individual not to provide data if they wish. That's so crucial. So there's a lot that's out there already that we can lean on as an industry when we are ready to do that. I'm actually less worried about the practicality. I think the biggest challenge is most investors want to reduce frictions to coming to have a conversation. And there's a perception, rightly or wrongly, that for a founder, the experience of like, before we speak, here's a form right in front of your face, that may not be the best experience of meeting with a funding organization. And so then the question becomes, if it's not upfront, when does it happen? If it happens later on, are you missing data early on? You've got to do something about that. And I actually think that's the process change that's tricky and why it's going to be so essential to have these conversations with founders, because it is in fact their experience that matters, and to figure a way through. And then of course, if we're all doing it, then it becomes different. It's not a single fund creating a more frictionful process. I know Noga, I'm not speaking out of turn, you've even thought about, you know, does a founder do it once and then they share just a link, much like a link tree or something like that, so they never have to do it again. So there are things we could do, I think, over time to make that much better. But personally, I've been a fan of your deep pragmatism on this, because I think if we'd put that issue as a thing to be solved before you get going, I think we would be years before we resolved it. And so long as we are really honest about the imperfections and we have all the caveats around it, then I think it's better we get going and know that it's not going to be perfect at the edges.
I just say it shouldn't. It just shouldn't be a problem. Like. Like venture capitalists tend to be okay at technology, apparently. We have these things called CRMs, and funnily enough, one of our core jobs is to get to know the person that we give money to. So we should be able to ask a few simple questions and put it in a database and give it a no without any much hassle or change management or other BS.
I think there's many really good examples of specific programs that look at, I guess, the supporting women. I think the challenge, though, is there's too many gaps in the pipeline where the support isn't there. So from an incubator perspective, I think we have quite a unique view, because we often have a relationship with a company for, it's probably an average of 5 years. So they may do a cicada program during that time, but they probably often do others. And so part of our job is actually helping sort of, I guess, orchestrate where they go to get that support, and almost like building that journey so they don't fall through the cracks in the pipeline. But that takes, you know, a lot of curated effort, and that's, I guess, the sort of value out of being part of an incubator like Cicada. I think what would be really powerful is the data we collect through understanding those experiences of women founders, is that we're able to share that with a standard like this, so others can learn where those gaps are and how we solve for those gaps or those conversion issues.
Thanks, everybody. We might wrap up the... Josh, one last question, yep.
Simply put, whatever you want to call them, investment analysts, researchers, whatever, have far stronger opinions and ideologies around this than I ever will. And they're active in it, right? Like this is what they want to do, and they're really active in trying to understand how to, you know, not only find the best people, but like just have this sort of diversity of views and thoughts and cultures and whatever play into what they're trying to invest in and talk to people about. So from our perspective, or my perspective, I've never had a problem going into the organization and go, hey guys, we really have to think about how we do this, right? It's like, Grant, hey, how are we going to do this? Not, please help us figure this out kind of thing. So I think that's contextually a bit of the industry thing as well. And we find that even within the businesses themselves, like generally founders of these startup businesses are strongly aligned value-wise with diversity in their organizations and values around how to, you know, do whatever it's going to be for the benefit of not just the employees, but the customers, et cetera, a lot of the time is too. So it's not perfect, but I wouldn't say it needs to be a lot of the time a top-down driven process. I don't know what you guys find.
No. Okay, thanks everybody. All right, we are not wrapping up just yet, but I would like to thank our panellists. Thank you so much. Kate, Lucy, Liza, Grant, really appreciate your time tonight. All right, we are nearly there though, I promise. Wake my computer up. Okay, so Tamar Michaela, one of the original co-founders, has forgotten that I asked her to speak now. No, I'm just going to ask you as one of the original co-founders just to share a few reflections on where we've come from and how sort of think about the next phase and invite people to join the pilot.
Okay, so very, very quickly, we started Equity Clear. So Alberts are in the room today and with Giant Leap. We've got 10 other firms, and very quickly, Blackbird were on board. Well, you kind of cheated. You put your report out and we'd already met and we hadn't put our reports out yet. But it started because there was a deep frustration amongst the investor community, frankly, that we know that we need data. We've heard it a million times tonight. I'm not going to keep talking about that. But it's a transparency exercise that is now shifting into an infrastructure play. And it's, you know, it is world leading, and we've got we've always said that Australia is quite small. It's voluntary. I mean, WGEA sounds hectic, as Lucy outlined. So let's do this as an industry. Let's do this with government. Let's do this with incubators and actually make change, because we all know that diverse teams outperform. I mean, Equity Clear is already outperforming as per usual. Fortune changed the world list a couple of years ago, and then now, of course, more pilot participants than ever. And Grant, thanks for being our token male. And I didn't see title on the, I didn't see title on this. So we need you to sign up. But no, but in all seriousness, this is not a women's problem, right? It's everyone's problem. And we especially need men and the current kind of holders of power really to to come on board, and it really excites us, and we love having so many men allies, and we need them on board and everyone to be on board with that. As Noga said, I have one clear ask for tonight. Sign up to the pilot. It's pretty easy. If we're not going to do it now, when are we going to do this? I mean, it is now is absolutely the time. And also just wanted to say a thank you again to the New South Wales government, Minderoo, WA government for the report backing, and for the countless people and organisations that have sponsored and supported this initiative, which is now a real legit thing. Keep putting your money towards it. We need money. I love what the minister said before. We called it show us the data because we wanted to show us the money, right? I mean, that was so brilliant. And then also definitely again to the team, Equity Clear, Genevieve, you've been incredible. Ananya, thank you so much. Faith, there's another huge plethora of people that have supported us to get to this point. And my special thank you to Noga, who's become like really one of my best friends. We spend an inordinate amount of time together, and you've really brought the vision to life, and we're so excited to continue doing this. And thank you so much. We just got your little token of appreciation. And what do they say? I don't want to hold you, but I'm like now between you and your drinks and having chat. So thank you so much.
Well, I will remember what I said before. This is not the end, it's just the beginning. So scan, join the pilot. You are not committed to doing anything. We can just have a conversation and talk more about it, but please express your interest. And I would just like to wrap up by saying that this is been really an incredible process. We might just go to the last slide, but I just wanted to thank everybody for all of their support and really just reiterate that the opportunity ahead, it's simple, to move beyond measuring outcomes and start understanding how opportunities move through the system, because better visibility leads to better evidence, and better evidence leads to better decisions, and better decisions create the opportunity for everyone to have better outcomes. From anecdote to evidence. Thank you so much. And you can please stick around, have some drinks, a conversation. I believe we have this space for at least another half an hour or so. Thanks.